Oil hovering around $70 a barrel after yesterday's broad market sell-off. Let's bring in Citigroup's global head of commodities research, Ed Morse. Citi recently lowered their global oil demand estimates for 2021. Ed, great to see you, and interesting that you have just done that, lowering the oil demand forecast. Meanwhile, at the same time, natural gas prices, of course, have been soaring across Europe, and that's been affecting Henry Hub. How do you balance out those two competing factors over the coming months?
Sure. So natural gas is overwhelmingly a power generating fuel, and oil is overwhelmingly a transportation fuel. So their competition is limited, although there is competition, particularly in the winter fuels market. We certainly have some liquids of demand. Propane in particular is a winter fuel in Japan, but the gas market, as it's entering this winter, is seeing extremely low inventories in the U.S. because of a lack of drilling on the natural gas side, and extremely low inventories in Europe because of a lack of delivery on the part of Gazprom and a lack of alternative supplies. So these markets are really poised globally for a phenomenal supply shock on the upside, a spike of considerable magnitude if we have any bit of cold weather at any point in time. But the oil market is not really affected by it. The oil market has its own supply and demand balances, and there the inventory levels that grew over the course of the pandemic was about 1 billion barrels extra. We're seeing those inventories being depleted, but they're still larger than what they were before, and it's just not like the gas market.